Have you ever wondered if the next financial safe haven isn't gold or real estate, but something digital? Welcome to a new era where Bitcoin ETFs like IBIT are rewriting the rules of investment security. In this video, we're diving into why IBIT's record-breaking volume has everyone, from Wall Street veterans to everyday investors, reconsidering their strategies. Stay with us as we break down the numbers, uncover hidden risks, and explore whether Bitcoin-backed ETFs could truly become the next big thing. Get ready for facts, insight, and a whole new perspective on modern finance. The shockwave in crypto finance. The world of finance just felt a tremor, and it wasn't from interest rates or inflation figures. It was from IBIT shattering volume records. This move sends a bold message. Bitcoin is no longer just a fringe asset for tech enthusiasts. It's becoming a serious player in global portfolios. The surge in IBIT's trading volume signals more than just investor curiosity. It reflects growing confidence in Bitcoin's evolving role within mainstream finance. For years, critics dismissed Bitcoin as too volatile to be trusted. But today, the narrative is shifting. Investors are realizing that with proper structures like ETFs, Bitcoin can deliver stability with upside potential. IBIT's explosion is not just a one-off event. It's the latest chapter in Bitcoin's transformation into a respected financial asset. What is IBIT and why it matters? IBIT, short for iShares Bitcoin Trust, is BlackRock's major leap into the world of Bitcoin-backed ETFs. Launched to offer direct exposure to Bitcoin in a regulated, investor-friendly package, IBIT removes the complications of private wallets, keys, and confusing exchanges. Investors can now buy Bitcoin exposure as easily as they'd buy shares of Apple or Microsoft. But what makes IBIT truly significant is its legitimacy. It carries the weight of BlackRock's reputation, offering institutional-grade security and transparency. This shift makes Bitcoin accessible not just to tech-savvy traders, but also to traditional investors seeking alternative assets. IBIT matters because it bridges the gap between old finance and new finance, proving that Bitcoin isn't a speculative gamble anymore. It's becoming a trusted asset class. The numbers don't lie. Breaking down the record volume. When IBIT recently broke through record volume levels, it wasn't by a small margin. It was a massive, unmistakable statement. We're talking billions of dollars worth of Bitcoin exposure changing hands, outperforming many long-established ETFs in trading activity. In a single trading session, IBIT recorded volumes rivaling traditional ETFs that have been around for decades. This level of liquidity doesn't just reflect excitement. It builds trust among larger investors who require depth in the markets. Comparing IBIT's numbers to competitors like GBTC reveals a clear trend. Investors want Bitcoin exposure that is regulated, liquid, and backed by financial giants. The raw data reinforces the idea that Bitcoin's reputation is evolving from speculative asset to serious strategic investment vehicle. Why traditional investors are flocking in. For decades, traditional investors swore by a familiar set of assets: stocks, bonds, real estate, and precious metals. But now, with IBIT leading the charge, Bitcoin is gaining a seat at the table. Risk-averse pension funds, cautious mutual fund managers, and conservative family offices are all beginning to allocate a percentage of their portfolios to Bitcoin exposure through ETFs. Why? Because the structure of an ETF mitigates many of Bitcoin's historic risks, such as custody and security, while providing the diversification benefits of a non-correlated asset. When trusted names like BlackRock wrap Bitcoin in a transparent, regulated product, it unlocks capital that was previously hesitant. For the first time, Bitcoin feels less like a gamble and more like a smart hedge against economic uncertainty. How ETFs tame Bitcoin's wild side. Bitcoin's journey has been wild, marked by hacks, lost coins, and extreme volatility. But ETFs like IBIT are putting a leash on some of that chaos. With regulated custodians handling the underlying Bitcoin, investors no longer face the personal risk of losing private keys or dealing with shady exchanges. Pricing is transparent, governance is institutional, and daily liquidity provides an exit strategy if markets get rough. This doesn't mean Bitcoin itself has changed, but the way investors interact with it has become far safer and more accessible. By framing Bitcoin within a regulated vehicle, ETFs open the door for traditional capital to engage without needing to become cryptocurrency experts. In short, ETFs help Bitcoin grow up without losing its core appeal. Institutions are quietly building positions. Behind the scenes, major institutions are quietly making moves that could reshape Bitcoin's future. BlackRock's aggressive push with IBIT isn't happening in isolation. Other giants like Fidelity, ARK Invest, and even traditional banks are dipping their toes into Bitcoin exposure. Their approach is cautious but deliberate, signaling growing acceptance at the highest levels of finance. Institutions aren't buying Bitcoin out of hype. They see a strategic asset that can hedge against inflation, currency devaluation, and systemic risks. These players have the patience and deep pockets to weather volatility, which means their involvement adds stability to Bitcoin markets over time. If you think Bitcoin's best days are behind it, think again. The real money is only just getting started. Retail investors, are you late or early? Many retail investors are wondering, with IBIT booming, is it too late to get in? The truth is more nuanced. Bitcoin has already gained significant institutional credibility, but we are still early in the broader adoption curve. Global pension funds, insurance companies, and sovereign wealth funds have barely scratched the surface of Bitcoin allocation. As more capital flows into regulated Bitcoin products like IBIT, scarcity dynamics could drive prices higher. However, it's important to enter with eyes wide open. Expect volatility, set clear risk limits, and don't chase price spikes blindly. Being informed and strategic matters more than timing perfectly. In this evolving landscape, careful positioning could offer powerful rewards over the long term. A tipping point for finance. IBIT's record volume isn't just a headline, it's a signal that we are standing at a tipping point. The fusion of traditional finance with Bitcoin's decentralized promise marks the beginning of a new era. Investors are no longer forced to choose between security and innovation. With ETFs like IBIT, they can have both. Bitcoin's path to becoming a recognized safe haven is still unfolding, but the momentum is undeniable. If you want to stay ahead of these seismic shifts in finance, now is the time to get informed, stay engaged, and think beyond traditional boundaries. Thanks for watching today's breakdown on Nexus dividends. If you found value in this video, make sure to hit that like button, leave a comment sharing your thoughts, and subscribe so you don't miss any of our upcoming deep dives. Your support means everything and helps us bring even more powerful insights straight to you. Stay curious, stay smart, and we'll see you in the next one.